Hey guys, Max here. Let's go over 7 financial secrets your bank doesn't want you to know and how to use them to your advantage. There are a lot of things that you don't know that happen behind closed doors that you can use to your advantage. Thankfully, I have the secrets. Let's go through them starting now. All right, number 1, credit cards. If you have credit card debt, credit card interest is probably eating you alive. The minimum payment is not going to pay off the balance, not even remotely quickly. I want to show you what happens, an actual example of someone close to me. So they had, what was it, a little over $3,000 in debt. Okay, which is fine, $3,100. But here's the thing, with an interest rate of 26%, to give you some context, a car loan, my last car loan was about 2.5%, and my last home loan was about 3%. Credit cards have huge interest charges. Okay, so she had $3,100 worth of debt at 26% interest rate. She was making a $100 minimum payment per month. That means it would take 52 months, 4 years and 4 months to pay off the balance. That is crazy. Crazy. You actually pay, 40% of your payments go towards interest, which is just mind-blowing. So you have a $3,100 balance. You're going to pay almost $2,100 in interest. That's how credit cards eat you alive. So by all means, if you have credit card debt, that's okay. We all go through things. Do your best to pay as much above the minimum payment as possible. And if you have multiple, use the Avalanche Method, which means you choose the ones that have the largest interest rates and go after those first. So go after the ones with the highest interest rates first. Thankfully, this was just a one-card situation, so it wasn't too difficult to figure out which one to go after first, second, third. But if you can, do your best not to pay any. Do your best not to put purchases on credit cards that you can't pay off that same month. If you cannot afford it, then the question you have to ask yourself, do I actually need this? If the answer is no, then do not put on the credit card. Okay, number 2 is checking account fees. You know, if you have less than a certain balance in a checking account, they will charge you a fee. Yeah, I didn't know that because I've never had this happen, but apparently these checking account fees can really get you too. Okay, let's go over all the checking account fees are. This is just from Value Penguin. Just shows a bunch of the checking account fees here. TD Bank, Citibank, US Bank, all different banks here. So they are between $5, $10, $12, $15. But here's the thing. You can avoid these by doing many things. Check with your bank to make sure they have these same things. Almost all the banks I've seen, it's about $1,500. So you just need to have an average balance of $1,500 or more, which is really simple. That just means $1,500. Keep it in the balance, keep it in your checking account, and don't touch it. Always have a little bit more than that, obviously, in case you're using it, surely. Average daily balance $100, average monthly balance of $500, direct deposit of $500. If you have a personal loan through US Bank, direct deposit of at least $250 or an average daily balance of $1,500. Most of the ones I've seen are the average daily balance of $1,500. So that just means if you have at least $1,500 in the bank throughout the 30 or 31 days in the month, then you're kosher. But you don't want to pay $15 for having less money. If you pay $15 a month, that's $150 in 10 months. That's $180 in a year. That's just to have them hold your money. So you're paying someone to hold your money. It should be the other way around. The person who's loaning the money out should receive an interest, not the other way around. So make sure the balance is high enough, or make sure you have the direct deposit linked up. Those are really small things that add up over time. Like it's only, $12, $15 a month. Even if it's only $10 a month, that's still $120 a year you're giving up free. Don't do that. Third is savings accounts. Savings accounts, I am so against savings accounts, not because I don't like saving money. It's a good thing. But my encouragement is for me at least, I only have enough money to go through the next 3 or 4 months of my life. The rest should be invested and growing. Because the reality is this. With a savings account, here are all the top 7 best high yields online savings accounts of July 2021. And these are the accounts that that usually don't have a physical branch, so they can usually pay out a little bit more interest because they have less overhead. But let's look at this. These are the 7 best ones according to NerdWallet. 0.5% interest, 0.2%, 0.2%, 0.4, 0.4. The highest on this list is 0.61%. Wow, that's a lot of money. No, it's not. It's actually not almost any money. So they're paying you 0.5% of interest, which is pretty much nothing. But here's the thing. When we take inflation into account, look at this. Inflation for the last month they have documented, May of this year, is almost 5%. So if you take 5%, subtract 0.5%, that means your money is still losing 4.5% purchasing power per year. Yes, you may have more money at the end of the year in your savings account, but inflation is a tax on all of us. It's taking that money and making it less powerful. Even if it may look like a different number, a higher figure in the bank, that's not reality. Purchasing power is all that matters. And when inflation is almost 5%, you take away 0.5%, 4.5% of the money is disappearing and you're not doing anything about it. That sucks. So what you can do is find a better spot for your money. So what I've done is done many different things, different investments, stocks, bonds, real estate, Bitcoin. I mean, there's so many different things that are a hedge against inflation. But with 5% inflation, then I only see inflation going one way for the rest of the year, and that is to the moon, not in a good way. So find a better place for your money. I do my best to find better spots for my money, but it's difficult, that's for sure. Okay, number 4 is I remember going into the bank when I wanted to close an account because it was a bad situation to say the least. They were not the bank that I should have been with. And I was told that I have to put in an order to withdraw my money. I was not able to withdraw my money. So here's the thing. You cannot withdraw all your money, and you must put in the order. An order to withdraw just my money, and we're talking less than $10,000 in the bank. It wasn't a ton of money. They didn't have that cash ready, or did they not want to give it to me, or did they want me to to think about my decision to leave in the bank? Anything above a few $1,000s, I've been told they don't have the money, and I had to come back another time. Put an order in. Give us a call. What? What is this? I don't really have a solution here, but I guess don't have very much money in the checking account in the bank. Again, have your money growing elsewhere. I guess that should be my takeaway for this is have money growing elsewhere. Have money growing elsewhere that's not stuck in a bank, because then I'm less likely to take it out and they can't even give it to me. It just seems like a lose situation. Just want to remind you guys, if you're liking this video, please make sure to like this video, to subscribe to the channel, and leave a comment below. The question I have for you today is, do any of these questions or any of these secrets look odd to you? I just find it so crazy how savings accounts pay 0.5% and inflation is 5%. That to me is literally mind-blowing. Crazy. Okay, number 5 is the bank, at any time can limit the amount of money you can withdraw. And when things go south economically, like they did in the Great Depression, which that may or may not happen in the future, they can, on an emergency basis, have what's called a bank holiday. And you think a holiday is a good thing, right? Because you're going to go hang out with your friends and go put a barbecue and go to the beach. No. A holiday means the banks are closed and you cannot withdraw your money. Yes, that's right. It's happened many, many times throughout our history. Many, many times throughout our history as the United States. There's been a bank holiday, which means so many people want to withdraw their money, but they don't let you withdraw it. So they can limit the amount of money you withdraw. And eventually it comes to a point where the physical branch isn't open. There's a long line to the ATM, and you can only withdraw usually between $100 and $200 per day. $200 per day, that's not going to go very far when you actually need it. So anyhow, number 6. How do you avoid this, or how do you use this to your advantage? Again, limit the amount of money you have within the banking institution, because they can limit you at any time. Number 6 is the rate they advertise is not the rate everybody gets. If you're taking a personal loan, a car loan out, make sure to ask the criteria for the best rate, because usually, banks are businesses. They want to show the most attractive advertising blip when they're advertising things. Of course, as low as 2% interest, but in reality, most people have 3 or 4% interest. Ask them what the criteria is and figure out what that is and what the credit score is, what the credit history is. If you can ask what it is, that means you can work towards it. Now, I don't really condone car loans or personal loans unless you really do need them. I've driven a car for years without a car payment. Personal loans, or I guess if you really, really need it. But that's the criteria. If you actually need to take a loan out, that's the criteria. And actually know exactly what they want. Because if you know exactly what they want, then you can strive towards that. Or if you're already there, good to go. And then lastly, if you owe taxes or any government debt whatsoever, the IRS, or any government agency for that matter, can actually go right into your bank account and take it out. Yeah, that's right. So they can submit a government order on your bank account to your bank, and they will give the funds to them. Doesn't matter if you actually needed those funds for anything else, if your rent's due on the 1st, it doesn't matter. They can take that money at a whim. And you don't know about it. You do not know about it. I've heard many people say, oh, I didn't pay this one government, I don't even remember what it was. It was some employment benefits, unemployment benefits, something of that nature as being an employer. And they took the money, and next thing you know, poof, there was the money gone, and then also a $150 charge to the customer because the bank had to seize the money and give it to the government. Lose, lose, lose. But the easy solution here. Easy. Pay your obligations. Pay your taxes. Do not avoid them. Pay as little as possible, of course. Talk to your CPA. Pay as little as possible, because obviously I don't trust the government spending at all. But still pay the taxes, because they will get you no matter what. Uncle Sam and the IRS are very aggressive. They will find you no matter what. So those are the 7 financial secrets. Use those to your benefit. I think the one that's really interesting, the one that really struck me, is these checking account fees. It's a tax on poor people. So if you only have $1,000 in your checking account and don't have the $1,500 that you need to hit their criteria, then they charge you $5, $10, $15 a month. It just seems like a tax on the poor. And there's a reason why all these large banks have huge building in downtown centers, because at $10 a pop per person with millions of customers, you can do the math. Hope you guys enjoyed that. Make sure to like and subscribe to the channel, and I will catch you guys on the next one. Bye for now.